This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
So welcome to Breaking Banks Europe, the #1 fintech radio network. This is episode 214, Ecosystem Zoom In, the Nigerian Ecosystem. My name is Elizabeth Kleinveld, and today I have with me Tunde and Uwem. And could you please introduce yourselves?
Hi, I'm Tunde, CEO of Online, which is a financial data connectivity gateway to African emerging markets.
Hi, I'm Uwem, Head of Investments at Launch Africa. Launch Africa is probably one of Africa's most active investors on the continent with over 140 portfolio companies.
How many portfolio companies?
140.
Wow, that's really a lot. Congratulations for that. So before we get started, it would be nice if each of you tell a little bit more about what you're doing, just to give the bit of the background, like the problem EDOC solves and the kind of startups that y'all are investing in with Launch Africa. Yeah? So let's start with EDOC first, and then we go to you, and then we'll dive in.
All right, great. So we're solving the problem we're solving. Basically, EDOC is building a Pan-African data infrastructure to solve the limited access of financial data for market access. And we're using that. So essentially what we're building is basically open banking for Africa, the pipeline. And we're using it to solve use cases such as credit checks, know your customer for enhanced due diligence check, which is required for high-risk markets. And we're now also looking at payments as well. And one of the things that we also are doing is we built a proprietary machine learning model, which allows us to basically categorize data and eliminates the risk of what people would normally use in this market, which is textual descriptions for classifying data, which is fraught with errors and can be easily manipulated. So
did I understand that you're already connected to 14 Nigerian banks?
Yes, we are connected to 13 Nigerian banks,
13?
giving us access to 70 million banking customers. Yes.
That's huge. Thank you for that. And let's hear a little bit more about Launch Africa before we launch into what's changed in the Nigerian ecosystem in the past 3 years.
Thank you, Elizabeth. Launch Africa is a Pan-African VC. We invest across all sectors, which means that we are not particularly selective as long as the business is enabled by tech. We invest from pre-seed to Series A now, and we're on our second fund. We are raising a $75 million seed fund 2 to continue actively investing across the continent.
And just for people to know, you are based in Africa, correct? I mean, in Nigeria.
Correct.
Yes?
We are based in Africa. So we're a very distributed team because our mandate is Pan-African. So we have presence in Nigeria, Mauritius, South Africa, Kenya, and Ghana.
But you're based specifically in Nigeria or not?
I'm based in Nigeria, yes.
Yeah, okay. Because just for folks to have a sense of where y'all are operating from when we talk about the ecosystem, we did speak about the Nigerian ecosystem in a session that my colleague Matteo did a little over 3 years ago. And so I'm real curious to hear y'all's thoughts on how the ecosystem has evolved over the past 3 years. And when you talk about it, it'd be great to hear it on the one hand from the founder's perspective, but on the other hand, from the investment side.
The ecosystem has evolved over the last couple of years. I'll be able to talk about pre-COVID and after COVID. So what you have is you do have a lot of young founders, and they're building a lot of good there've been a lot of good solutions in addressing key problems that we have in our markets. I think the key thing that I will point out that the solutions that I think have evolved or are better are the ones that are now actually looking for problems and solving a major problem, but using technology as a touch point to solve some of those problems. Whereas in the past, what I would say is that you had people just going to build technology and trying to find a problem.
Okay, so solutions looking for problems versus somebody first understanding what the problem is and pinpointing it. So do you see that too, when you've been looking at startups in the past 4 years?
Absolutely. One thing about the Nigerian ecosystem and founders is that they are hustlers. They like to build. But one thing that they've been doing of recent is now trying to scale outside the country. So you begin to see fintechs or even general businesses begin to say, hey, how do I service my customer base in Ghana, in Togo? How do I move into Francophone Africa? And that's something that we'll begin to see more of as founders begin to chase scale.
And I have seen within your portfolio that there were a lot of really good fintech solutions. So is that still something that you're seeing, that Nigeria has a lot of good fintech solutions to offer? And if so, have there been more changes from like a B2C to a B2B space or any other areas?
Yeah, as consumer expense continues to reduce because of inflation and devaluation, we're beginning to see more founders pivot to focus on B2B. So the business models that we're seeing nowadays are mostly B2B or B2B2C. More founders are trying to build infrastructure that enables the traditional ways of doing business. So it's more like, how do we build a back office, or how do we build an operational model behind the scene that enables other businesses to succeed? So we're seeing more of that. But another thing we see is founders building more of the same thing, thinking that the other founders couldn't figure it out, so they could figure it out. Unfortunately, that doesn't necessarily work because you just have duplicates of the same business models or the same businesses chasing doing import of customers. But at the end of the day, what we're also seeing is more experienced founders leaving their corporate jobs, leaving their corporate environments, and building solutions based off their experience in the corporate environment.
That's certainly the case with Tunde.
Yes, that's definitely the case. Obviously, with over 15 years banking experience, having worked for practically all of the UK banks and across products that have practically impacted every single household. So we've now taken that experience and now using it to solve some of the biggest problems in Nigeria and in the African continent as well. So
I think when you got started, you were focusing on source of funds. So where are these funds coming from? And through open banking, you could be able to verify, on the one hand, if somebody was immigrating from Nigeria to another country, yes, they have the funds, so they can get a bank account earlier instead of waiting 6 months or longer to be able to have an account. And then on the other hand, if they've been in the UK, maybe like you for 15 years, but they want to buy a house in Nigeria, where are those funds coming from? So that was one problem you were looking at solving in the beginning. Are there some others that you've added to it?
Yes. So initially we were looking to solve the regulatory obligations for proof of funds for remittances, which a lot of remittance companies are currently not adhering to, which is probably one of the single biggest risks. So just to give some more context, I'll probably say, your customer is one of the biggest risks to the African ecosystem. As much as you have all of these great founders building all of these nice solutions, a lot of them are not adhering to what I will say is global standards, regulations, especially when you look at the remittance market, where you have to do regulatory commission obligations for the source of funds. That's where we initially started from. And then we also wanted to look at immigrant banking, where you see a lot of large, outflow of Nigerians going to Canada, to the UK, and often struggle to access financial services or even credit, and have to pay more for utilities, whether it's for their phone service, having to go on prepaid utilities, having to pay rent for 6 months. And we initially wanted to solve that. But we actually stumbled on a niche market, which was the credit assessment checks, because we had to establish people's proof of funds, and we used our AI model, looking at large language models and clusters, we're able to stumble on a local market for credit assessment, which is what we're now looking to expand into other markets like Kenya as well.
Nice. So let's talk about the risk appetite of investors for a moment, because investors in Nigeria are different from investors in Europe or those in the US. And typically, being an American here, living in Amsterdam, I see that people want more proof before they invest, and that people are more risk averse and afraid of failure. Whereas in the States, if you haven't failed once or twice, we're afraid to give you money because we think you're going to make the mistakes because you don't know. So how's it like in Nigeria, and has it changed at all?
I would say that risk aversion has reduced over time, but we need to remember that the Nigerian ecosystem is quite nascent, it's quite new. VC funding took off 2014, 2015. So we just had 7-8 years of figuring out what venture capital is and investing in startups. Most Nigerian high net worth individuals are comfortable investing in traditional businesses, brick and mortar businesses, oil and gas, and all the likes. So when you go try to raise a fund from them or try to raise as a startup, because it's not something that's tangible, they struggle to connect. We should not also forget that what motivates most investors is fear of missing out, right? So as investors, and I'm talking to investors right now, we also need to show proof, and proof comes from distribution. How much returns are we giving back to the LPs on investments? It is that liquidity that sort of encourages the local investors to invest. So are we seeing more local investors play in the game? Yes. Is it at the level that I would be proud of? I would say no. But one of the things we're also seeing is founders, when they have their little liquidity from their secondary events or their little exits, they come back to the ecosystem to invest in younger founders. And I think that that's quite encouraging. And that is also helping people see the value of investing in startups.
I think that's really important. And we also have seen that at Startup Bootcamp, that some of the founders who had exits 2-3 years ago come and join our fund and support the other founders that are starting the programs, and sometimes they even have time to be mentors. If we look at the areas within fintech that are typically hot to invest in, or that you see a lot of action in terms of the startup scene, but what would they be?
I would try to group fintech investing in under the categories of savings, lending, and probably services. We already have quite a number of the incumbents in the saving aspects. We have the Kuda banks, we have the PiggyVest, we have the Cowrywise. So we do have quite a big incumbent. Any other person building that space is building a crowded space. I would say there is more investments going into lending because, like Tony had mentioned, credit scoring is still a big problem, right? And profiling and determining who best to give credit is a big problem. Now, we're also seeing an increase in lending to small businesses and SMEs, so that is hot among the investors. And then in fintech services, fintechs that are building backrooms for credit facilities, or digitizing typical backrooms for community savings or bookkeeping. We're beginning to see more investors invest in that space. So under those three categories, quite a number of investors are investing across those verticals.
I've also recently spoken to another Startup Bootcamp company called Trove Finance, and it seems like they're really helping people who don't have the $10,000 to open an account to now, from $1, because of their partnership with Drive Wealth, be able to invest in the U.S. stock exchange or invest in bonds or ETFs, whereas the U.S. markets were not accessible for them before, let's say, the Trove offered this solution.
Yeah,
Do you see?
yeah. I know them quite well, and I'll still categorize them under savings, and I'll explain why. Most Nigerians right now, because of the devaluation, are looking for ways to hedge. And wealth management platforms like Trove, like the Bamboos, like the Rise Vest, offer that opportunity for people to hedge their bets and sort of protect themselves against currency devaluation. So yes, we're beginning to see more people, build in that space. There is a company called Kevel that I spoke to months ago, who are a prop tech, but I also say a savings and fintech, because what they do is help people buy fractional real estate. So we're beginning to see people get creative in that space.
Very nice. And like Tundi working on KYC type of stuff, do you see, RegTech is something that's also hot, or is there less action on that space?
So for us, there is a lot of action on RegTech. I think so. For us, we use data. We're a data infrastructure, but we use data to solve different use cases. Regulatory technology is very hot right now. It's going to be, I think, in the next 3 to 5 years, very hot in terms of, because of the you're going to see
regulations. More and more. It's crazy.
More stringent regulations. You can see that in Nigeria already. There's the central bank has been clamping down on all the banks. There's a new fintech regulation. Probably coming. On a global perspective, you see there's upcoming legislation on cryptocurrency that's going to start looking at, and those are the areas that we're going to address. So, we're well positioned because we have the data to help, whether it's for KYC, know your customer, know your business. You're going to see more stringent regulation, especially around moving funds around, AML, so that RegTech is, I'll say, mid-one right now, but it's going to be super hot in the next 3 to 5 years.
And I think you're right. It's RegTech. I just see all these new regulations coming, not just in your part of the world, but also over here, and the burden on banks becomes so tremendous. And for anyone who's worked in a bank, we know they're like, oil tankers. They're really hard to move around, but all these smaller vehicles that they can work with, they're the startups, the scale-ups, they enable them to do things they couldn't do otherwise. I would love to find out, since the pandemic, Nigeria has become less cash-based than it was before.
Yes. So you have more digital solutions. I think that was also largely because of there was the Central Bank of Nigeria tried to reduce the cash and reduce the dependency on cash. And there are more digital solutions now. You see more people focused on payments, whether it's offline payments, not just looking at payments through smartphones, but also trying to serve the underserved, looking at mass market. So you have more digital solutions. You have companies like Money Points that are now bringing more POSs into the market. So it's a lot easier to use your cards. And I would say that if you look at pre-COVID and COVID now, there's probably a high percentage that have gone from cash-based to more digital. I would say a huge chunk of the population, if we go back 5-10 years, you couldn't pay your drivers, you couldn't pay your artisans, you couldn't pay them in a bank account, and they were all cash-based. But now I would say a good 90% of them are being paid through their bank accounts. At least I'm talking about staff that are being employed by private individuals now.
You see that trend as well, Uwem?
Yeah, I do. And it's not just because the Central Bank of Nigeria tried to reduce the number of, the amount of cash in circulation. I would say that, with the increased mobile penetration, with more people having access to a smartphone and having access to cheap data, we're beginning to see that more people are open to trying out digital tools or digital channels for moving cash. We're also seeing more e-commerce platforms emerge. And this is moving away from the incumbents like Jumia and Konga. We have smaller e-commerce stores led by the growth of the likes of Clasher and Bumper. So beginning to see more people engage in e-commerce. And when you do that, obviously, the mode of payment oftentimes is through digital channels. And there is more of there's a big effort into bringing the underbanked into financial services. And that has taken quite a lot of effort and a lot of time. But like Tunde mentioned, the likes of Money Points, the likes of Paga, through their agency models have made, bringing those people that typically didn't have access to financial products into the financial net through their services.
Yeah, I'm curious. Agency banking is now huge in Nigeria. And, just to give more context, agency banking, which is where people don't have to go to a cash machine to withdraw. They can basically go to someone on the road that has a cash machine, swipe their card and get funds out of it. And now you're seeing more people get access to that. And that is huge now, giving people more access to, to funds or access to cash, to funds rather.
So I think it would be interesting if you told us a little bit about some of the movers and shakers, because you're mentioning names like Money Point. I think you mentioned Bamboo and Kuda, but maybe in the past mentioned Paystack or PiggyVest, Flutterwave. Could you tell us a little bit about how you would cluster some of these companies, and if, like we saw with Trove Finance and Drive Wealth, are any of them beginning to, have strategic partnerships with one another? Because I always find that interesting. Who partners with whom, and how does that enable the end user to have more access, like Tunde was just saying, with agency banking or to other things that they didn't have access to before?
We're seeing quite a number of the movers and shakers. So for agency banking, Money Points would always come up because they've done very, very well in the last 1-2 years. We have another company called Traction Apps. And then you have OPay, right? OPay, with their war chest from China, has done extremely well in building out their agency banking model, reducing transaction fees, and enabling more and more people to easily receive and send money just through their mobile phone number. So we're seeing quite a number of these payment processors do quite well. In terms of wealth management and savings, we've spoken enough about Trove. We have Bamboo, we have RiceVest, and most of them actually do this in partnership with Drive Wealth. In the SME lending space, we have an SME banking. I'd probably put them together. Probably have Fair Money, which is quite big. We have, Kuda Bank is now beginning to. They now have a business banking side. We have Brass Bank, and then we have forgotten this name, Lenco, doing quite well too in the market. I'd allow Tunde, if he remembers any right now, just went blank.
So when you talk about movers and shakers, I kind of like scale ups. One that I particularly like is Money Point. Sorry, I said Money Point. Obviously Money Point, they're doing huge numbers, but Money Africa, I think, I've seen, their knowledge of the market, what they've been able to do with community banking, understanding the users in Nigeria, that the first thing you have to do is not just solve a problem through technology, but you have to establish trust with your users. And, just their knowledge of community banking and what they've been able to do in the last 18 months has been very good. So I tend to look at more scale-ups to see who are it's not just the big players, but who are the up-and-coming that are, doing, damage in the company, in the country, or in the ecosystem. And you see new entrants that are building new solutions that you see are doing quite well. There's a company called iPervey that is using open banking to solve airline compensation, which is a huge problem in Africa, where a lot of flights are being delayed, but no one's addressing that. There's a company called Deep Loop that is looking at sentiment analysis, which I also think is going to be the next area for marketing. There's another company called Tech1M that looks at HR and EdTech. So there are, a lot of Nigerian founders that are building good solutions that I think over the next 2-3 years are going to be major players in the market.
Could you tell me a little bit more about community banking and how that works?
So in terms of community banking, it's basically, and that's a very good question, because I think a lot of people have gotten it wrong. in terms of we have 900 microfinance banking or 800 microfinance banks in Nigeria. But community banking is basically going to a community, getting a community leader where you can basically get deposits, but at the same time, you can lend to them. But you basically establish trust with that community. And it used to be a very manual-based system where it was all paper-based, where I would go in, find the leader of a community. And let's say, for instance, we talk about a market where there are like 500 people. You get that leader of that community that could be your rallying point, and you establish trust, and you could basically go in and collect savings off of them. But then the key part of it was that if they needed a loan, they could access that. So what you call your core banking, they could access a loan off of that. But I think it's been very challenging in Nigeria because of the attrition. A lot of people collect loans from multiple banks, so it's very difficult. But you are now seeing new models where, and I think there was a rush to digitize this. And I know this because I was able to get a microfinance bank, about 7 years ago, and we tried, and the bank is still operational, but it was one of the, we tried to lend to them and we understood the pain points. But I think a lot of people have rushed to digitalize that process without understanding the pain points. And I think that's when I mentioned, like companies like Money Africa have been able to get it right by understanding that you only automate certain touch points and you cannot automate, the full.
Yeah, sure. The reason I was
I just wanted to add to what we've actually missed out on talking of startups that are leveraging on blockchain, and this time I'll just connect it to financial services. AfriX does that quite well. They help people move money locally and internationally. And then I recently spoke to a company called Mikash, 2 female founders, amazing. And what they do is also, move money around without even interacting with the cryptocurrency of blockchain. I think that's also one of the future for fintechs across the continent.
I think you're right about that.
Bill and I have both spoken to Mikash, and we like Mudupe and a co-founder. They're doing, what they're building is amazing as well. So I would agree with Uwem on that.
Very cool. So can you talk a little bit about, we talked about movers and shakers in terms of the startup scene. Who are the ones that are investing in these startups before they become scale-ups? And can you pinpoint on the one hand, the ones that are angels doing the really early, like pre-seed, and then who's doing some seed or Series A, just so we understand that landscape a little bit better?
I would say that over the years, they've really increased from angels like Tommy Davis, who heads the Lagos Angel Network and the Africa Business Angel Network. There's now a consolidated group of people that are investing locally. There is Olumide Soyombo, who now has a venture. We have a ventures platform led by Kolaino. We had Future Africa led by Aboyeji. We have quite a number, to be honest. Launch Africa, honorable mention. Micro Traction. So in Nigeria, we have quite some active investors. And just to add that, we also have founders that are also investing. So you have Benga of Flutter, we're actively investing in startups. We have Abdul of Mono is another fintech that I should have mentioned earlier, who is also actively investing. So we have quite a number of founders that have raised big rounds, also reinvesting at that angel stage.
That's really nice. There were some other questions I wanted to ask about the state of the incumbents. And in the past, maybe they were less likely to work with fintechs, and maybe now they're seeing that the fintechs aren't trying to compete with them, but maybe offer them solutions. Can somebody speak to this?
I would say, so we've been able to establish, very good relationships with the banks. So the banks are more open now to working with fintechs. One of our biggest promoter is Uwem Bank. We're working with them with a number of products, and the banks are more open now. I think initially they saw fintech as a threat and we're not so forthcoming with working with fintechs. But now you see more banks open to fintechs, and you see the banks also setting up their fintech arms. But I think there's more collaboration, and you're going to see more collaboration more consolidation and more partnerships in the market, because I think people realize that it's easier to work together than to compete. I could give an example. We do credit assessment, but we're now working with a company called SourceID, who does ID, and they do ID and address validation, KYC, which is a textual part of it, because the regulation requires that you physically have to verify when opening a bank account, you have to verify where the applicant lives, and they're now using GIS. And we've realized that it's easier to give a one-stop solution rather than to have a customer
Yes,
two APIs.
absolutely.
Well, just to add to that, thankful for everybody, and like you, Tunde, who have been building integrations and APIs that would help banks not just think about building their products themselves, but also actively look out at how they can integrate with third-party solutions that helps them do the job better. But we've gone through the phase where banks, all they did was copy and try to build their version in-house. But that failed over time. I wouldn't mention the name of the bank, but there are quite some big popular banks that were notorious for doing that. Before they then realized that collaborating was a better approach and would save them money and time to market. So we're now in that phase where, and thanks to regulations, banks are now seeing startups less as competitors and more as collaborators. This is not to say that a lot of these banks don't behave like sharks and try to swallow up the startups, but I mean there is less competition and more figuring out ways they can collaborate and ways that they can acquire these startups.
I was just smiling because I see that over here too. So that. Banks at first being afraid and then seeing they're just not going to be able to solve these problems all themselves because it takes them too long, and they don't have the agility that the startups have. So working together is the name of the game. My next question is about events, places to be in the local ecosystem that people need to know about, be they investors, or if they're a startup that wants to be seen, where would they go? Is there one or two events that you say, these are the ones you need to be at?
I would say Moonshot. I think they had Moonshot event last November, and it was just incredible. You had the likes of, you had big players, not just African players, you had Novitske, you had people from Techstars. I think, it was well organized, the access you had to speaking to people. I remember, I think, Uwem, you were a speaker at that event as well.
Mm-hmm.
It was one of the better events. You had not just you had the scale-ups, you had the major players, and it was easily accessible to have conversations. So I would say Moonshot that's the one event I would tell everyone not to miss.
I agree with him. I think that for founders and investors and people that are interested in ecosystem, I think that everybody's now hungry to attend not just networking events, but events that they can gain something tangible from, where you have active players of the ecosystem coming to share their stories genuinely and interact genuinely. And Moonshots by Tech Cabal was one of them, and it's still going to be there this year. I think that Lagos Tech Fest is happening sometime in February. There is another one that I for the life of me, I cannot remember the name, but Africa Startup Festival also happening sometime in November. Yeah.
Nice. So is there something that we didn't touch upon that maybe we talked about earlier that I forgot to ask? Because if so, now's the time. If you feel like we covered everything, then I'm going to say thank you.
I think it'll be good, if you don't mind.
Go on.
I think it'll be good for people to understand, what kind of companies Uwem is investing, ticket sizes, what areas he's looking for. I think that'll be good for listeners to understand, so they know,
nice.
And how they can easily reach you as well, just in case.
Okay. Again, Launch Africa invests at the very early stage from pre-seed to pre-Series A, and now a bit of Series A as we raise our second fund. We're not just looking for fintechs, but we're looking for businesses that are basically building infrastructure for the traditional ways of doing businesses. We are very fintech heavy, which means we actually love fintech. Since this is a fintech podcast, we like to invest in B2B, B2B2C business models. And that's because, there's faster route to market, there's more customer lifetime value out of that business model. And I think that the revenue streams are more sustainable. Our average check size is about $300K. And then we invest up to $1 million in follow-on. I think that's pretty much it. And you always can reach out to me. I'm always available. Social media, email, I'll respond to you and we'll have a chat.
Yeah, and I think Uwem mentioned a fantastic point. Even though this is a fintech podcast, we've now seen a lot of investors and a lot of people shifting away from fintech, where it was so heavily focused, or solutions were so heavily focused on fintechs. We're now seeing the ed tech, the HR tech. So we're now seeing a lot of shift away from just the fintech market. So I think you're going to see more people less focused on fintech and less fintech solutions over the next 2 to 3 years, and you're going to see other areas come in. So I think fintech is not going to dominate the market as it used to. Sorry.
Just wanted to add that for me, the way I see fintech and the way we see it as Launch Africa is that fintech exists at the intersection of different industries now.
Exactly.
If we are going to formalize and digitize the insurance industry, there's going to be a bit of fintech because you have to, sometimes you might want to have a wallet on the app, you have to collect payments and all that. It's the same thing with I mentioned insurance, microinsurance, same thing with health tech and all. You find that fintech tends to play at the intersection of all these verticals. And what happens is that some founders assume that, hey, let's build the fintech arm and forget that the core industry you're trying to digitize you need to figure that industry out. And so they end up being called fintechs and build their models around being a fintech. And then at the end of the day, don't succeed long term. But just to add, now we're beginning to see more people veer or build their startups as an AI company. I mean, I'm sure every time you look at pitches, everybody's saying AI-based this, AI-based that, AI-based spend management system, AI-based blah, blah, blah. But more importantly, what I'd like to see, and I'm just, saying this is people actually figuring out how their business makes money before actually overlaying this extra technology on it. Because if your business model doesn't make sense, then whatever you're building, it won't work.
I think that's a very good point. Hey, thank y'all for adding that. I would like to thank you for being part of this episode, and would like to see in another couple of years how things have changed. But as you know, I'll be keeping up with you in between. So thanks so much, and looking forward to speaking to you again soon. Thanks.
Thank you, Elizabeth.
Thank you, Tunde.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.